Okay. Let me get our screen going. And we're good to go. All right, so in this one, we're going to build a portfolio. And maybe, maybe you like to be like hyperactive, right? Maybe you've saved up, $1,000, right? You've saved up $1,000, and you want to start investing, right? And you're gonna, you can invest, let's say you can invest $300 a month, right? And remember, you got to keep rebalancing. So we're going to rebalance annually, right? And so you got $1,000. You want to get into the stock market, and you're going to buy $300 a month, right? And you want to see like, okay, well, you want to be like hyper aggressive, right? Okay, so we're gonna go against this ETF right here, Teckle. This is going to be our benchmark, Teckle, right? and so what would happen if you were 100% in Teckle? That's what we're going to compare it to. Like if you dropped $1,000 a month, or $1,000 and then $300 a month into Teckle, what would happen? Right? Well, let's suppose that you're going to build, you're going to build an AI portfolio, right? So you're going to get into Nvidia, and you're going to get into AMD, and you're going to buy SMCI. And let's see here, what else do they have? You're going to get into, AVGO, right? And we're going to pick one more because you're hyper aggressive, right? You're going to be hyper aggressive in this. So, maybe Palo Alto or Microsoft or Apple. But we're not going to go with like these, I guess we could go with Microsoft, right? I mean, everybody knows Microsoft is, AI as well, right? And we just allocate 20% each because, we have five stocks. We're being hyper aggressive. We're going individual stocks, and our goal is to beat Teckle, right? And just to compare, we'll throw the VU investor in here, right? The VU investor, who no one beats, right? No one beats VU, So you're gonna eat the frosting?
Yeah.
Okay, you eat the frosting. So you're gonna get the VU investor, who everyone says no one beats the market, VU and chill, right? So we're gonna compare our portfolio to that one and to Teckle, right? And let's see what happens. Oh, I think I had to withdraw. I need to contribute, not withdraw. $300 a month. There we go. All right. So you come over here, all right, and we're looking at $459,000, and the VU and chill guys are at 76,000 or 77,000. And look at this, the Teckle. If you would have just went 100% Teckle, you would be $221,000, And if you look at this, look at this drawdown on Teckle, 74%. Right? And our drawdown on the tech stocks was, 29. So let's go look at the graph. Let's look at this and see how it performed. Now, look at this, right? Like Teckle in and of itself, right? It's that gray line right there. It's that gray line. So our portfolio was at 122, and Teckle was almost at 200K. And the Vanguard investor, I mean, they're just left in the dust. They're way back there. They've been lapped a couple of times. But look at this. You would have hit 215 with Teckle, and you just would have fallen down hard. And that's a big fall. 215,000 all the way down to $55,000. You gonna get some more of these? Yeah. Okay, there you go. So that's a big drop, right? And they'll scare you on that. They'll, look at that. Look how much money you lost. I mean, you went from 215 down to 55. I mean, it was such a bad drop that you almost, you almost caught up with, the VU investor. You know what I mean? Like they don't have to feel those big drops, right? And maybe you're gonna get in here and you're gonna panic, right? You're gonna panic sell or something. And I'll get into that kind of stuff later. You don't want to panic sell because you'll see what ends up happening when you do that, right? You just want to hold the course, stay going. But look at this. Our portfolio, this blue line. It takes off. I mean, it just takes off, right? So let's go look at what was going on with that portfolio, right? Look at this. Nvidia, $170,000. AMD, $15,000. Super Micro returned $125,000. Broadcom, 87, and Microsoft 23. Right? So, that's, you might think that Microsoft and AMD just aren't why would have those in there, right? Why not just go Broadcom, Super Micro, and Nvidia, right? But there's a reason. There's a risk reason. You're already hyper concentrated, right? I mean, you're hyper concentrated in 5 stocks. I mean, this is really how, this is really like, I mean, you could push it down to 4, and do 25 a piece, and but once if you push it down to 3, you're really getting down to some risk. This right here is really one of the, this hyper accelerates a portfolio right here. Now, of course, you could just go all Nvidia, and you would have done really well, but hindsight's 2020. The point is you want to build a portfolio, of stocks, typically, 5 to 10, and that that diversifies you pretty good. And four at the at the you're gonna do just four's really pushing it. That's hyper aggressive as well. Let's say, for instance, maybe you just want to do, you want this computer manufacturing in there, and